Hey, I'm Jay Goldman. Here's a look at the week ahead for the week of October 16th. This week, let's discuss the Federal Reserve. So as a reminder, the Federal Reserve, or the Fed, has a dual mandate. Number one, that we all have jobs, and number two, that inflation is kept stable. You know the Fed has aggressively raised rates to slow inflation, and it has worked. You see here, for example, as the Fed has raised rates to slow the economy, CPI, or the Consumer Price Index, has rolled over pretty quickly. But lately, we've seen a little bit of a different story. Energy prices have moved a little bit higher. And then last week, both CPI and PPI, the Producer Price Index, both came in stronger than expected. So the key question is the Fed done? And lately, we've seen some mixed messages from the Fed. On one hand, the September dot plot, where the Fed anonymously indicates where they expect inflation, interest rates, the economy to head, they've indicated one more rate hike before year end. And the minutes released last week from the Fed's last meeting back in September said, in quotes, all members said policy should be restrictive. This is basically fancy talk for interest rates should be high and should stay high. But on the other hand, we've seen Fed speak very different, more like saying that the Fed may not need to raise rates. For example, the head of the Boston Fed, Susan Collins, said that rising bond yields pressures the economy and therefore reduces the need for more rate hikes. The head of the San Francisco Fed, Mary Daly, said last week, the rise in rates equals a rate hike already. And then the head of the Philadelphia Fed, Patrick Harker, said he believes no more rate hikes are necessary. So with all this said, with the next Fed meeting on November 1st, what are we watching this week? It's a biggie. Jay Powell, the head of the Fed, speaks at the Economic Club of New York on Thursday. With the Fed's quiet period beginning on Saturday, this is pretty much the last chance for the Fed to provide hints to the markets about their plans for the November meeting. So from this speech, we expect three things from Jay Powell. Number one, he'll offer guidance or maybe clues in terms of what the Fed plans to do at the November meeting. Second of all, he'll reiterate the Fed's data dependence. And third of all, he'll talk about the fact that the Fed remains committed to bring inflation down to the 2% target level. So overall, our big takeaway is that we feel the Fed is done, no more rate hikes because inflation is slowing. It also takes some time to feel the full effect of higher rates on the economy, and the economy is already starting to slow down a bit. But the Fed, in our opinion, will maintain a higher for longer bias. You look here, for example, services inflation is still pretty high, and overall inflation is still above the Fed's 2% target. Thank you for listening. For more information, please follow us on Twitter at CeteraIM, and I'll see you next week.